Andy, what's happening, man? All right, Andy, maybe the mic is muted. Maybe somebody kidnapped you.
Sorry, you are correct. Thank you. Oh man. Hello, Scott, and hello, Jamie. How are you doing, my friend?
I'm doing fine. Thursday is over and done, and tomorrow's Friday.
Yes, that is true. But before Thursday is done, we have one more broadcast to do here. So
True.
let's just dive right into it, guys. Thank you so much for joining us today. We have some good stuff to talk about. Uh, Man, Holly, impressive today, huh, Jamie?
You got that right. And, I was just well, I'm not going to get ahead of myself here, but yeah, just spectacular performance from Holly.
hmm
And of course, we'll get into that soon enough.
Yes, we will. We'll do that. But let's go over the disclaimer, which we always have to do. So you regulars on here, just bear with us. Just remember, everybody, this is for educational purposes only. We're going to be talking about some setups and some price targets and profits and losses, yeah, and things like that. But just remember, nothing should be construed as investment advice. If that's what you're looking for, please visit a stockbroker, a registered advisor, RIA, something of that nature. But we are going to have some fun and talk about some cool software here. All right, guys. Before we talk about the software, we're going to talk about the fine support, education, and training that goes with the software. And we realize this is important. There's a lot of companies out there that just throw it to you, maybe give you a video and let you figure it out on your own. We do not do that here, guys. We have education throughout the week. I'll be talking about the TI University in the next slide, but we have basically four webinars in the 5 p.m. Eastern time slot every day. A combination of myself, Jamie, Steve, or is usually in on those. But on Wednesdays, we do throw you a curveball with Dan Merkin and Brad Williams. Great place to visit if you want to get a demo, the software and things coming down the pike, and a good Q&A place too. But on Friday, we put together a 3-hour webinar just for Q&A. So with all the stuff that we have going on during the week, Monday through Thursday, if that's not enough, come into that session. We'll have one tomorrow at 11 a.m. Eastern time. Great place to come to if you still have more questions. Come in there and we will you ask the questions and we will answer you and demonstrate anything we need to using our desktop sharing software. So all right, let's move on. Oh, let me not forget the traders room. Gosh, with Barry, our moderator. I'm sure most of you guys are in there, but if you haven't been, it is free for everybody. You don't have to be a subscriber. A great place to hang out. Great traders in there, 500 plus. And Barry's a great moderator, shows you his software and calls out his trades and things like that, so you guys can navigate the market together. Brokerage Plus, guys, this has been in beta for a while. It's still in beta, but if you fancy the idea of creating your own strategies and hooking them up to auto trading, this is Adult Swim only, and I'm not going to go too deep into it. To find out more information, go to trade-ideas.com/beta, and you can watch a nice little video in there that kind of describes the product to you. All right, you heard me mention about the TI University. Okay, so what we're doing now, guys, if you signed up recently, or maybe you've been with us a month, it doesn't matter, and you want to take this class, you are welcome. Or you've been with us 2 years and you want to take it, you can. Go to our training section in the footer of any of our web pages and just click on training, and you'll be cast to this page right here. And all you need to do is click on the enroll in UTI University. We offer that Monday through Thursday at the 12 o'clock time slot, Eastern time. It's an hour and a half each day, Monday through Thursday, and we basically take you through Trade Ideas 101, 201, 301, and 401. Basically going through very beginning concepts to advanced concepts on Thursday. So it's a great place, guys. Make sure you sign up for that if you're still, kind of struggling with the software. All right, let's take a look at our agenda for today. We're going to do a market recap. Wow, I thought we were going to finally see some follow through, and lo and behold, the same old song and dance, Jamie. Uh, we'll go with that in just a minute here after I go over this agenda. Holly recap. I mentioned it was an impressive day for Holly, and I don't think you realize how impressive it is until you've spent some time in this kind of market and trying to navigate it and get profits. And Holly did an incredible job today with some directional bias right off the get-go, and then pretty much staying going short throughout the morning until we got the bounce, and then the shorts ended, and we'll talk about it more when we get to it. But quite a day I thought for Holly. I'm going to give you the 4 scenarios of earnings season, okay, and the possible outcomes you can have, and I'm going to discuss each one, and we're going to kind of focus on kind of what we're seeing right now through this earnings season. New alert for Holly. This is something I just started this morning. I have some work to do on it, but I thought I would just kind of introduce it to you, just kind of so you can kind of see what goes into to making these base strategies. This is not going to be anything earth-shattering or breathtaking, but nonetheless, it's still already performing quite well, and we'll just kind of dissect that a little bit. And then, of course, we'll do some chart requests at the end if we have some time. And let me just go ahead and escape out of here, and let's pull up the spiders. And that's what we're going to look at here. Let me get a drink of water here for my allergic throat. All right, so boy, today, guys, and I've been talking about this wedge we have been building. We've kind of in a channel here. I could draw it. I don't have to draw it. You guys can see. We kind of also inside that channel we had a little wedge going right here, and I thought, boy, if we could break down or up either direction out of this channel we were doing or this wedge. I thought we may see some decent action, and especially I was thinking if we broke to the downside. Now, I think it had a lot of possibility. The spiders were actually doing about 2. There was some volume in this move, 2 relative volume, and I think if we could have made it down here to this swing stop, which is kind of like a support area, and it's also the area where Steve says, to on his TOWs, you might want to entertain the idea of doing an inverse, ETF. But I was, I want to say I was surprised, but I wasn't. Once the market got to a certain point and the volume kind of ceased right in here, and I could see that the volume just wasn't any there. There was not any more selling. It was just really kind of dissipating. And I said, oh boy, here we're going to go again, and sure enough, we got it. And we put in the tail once again below the 200-day moving average. We tickled it once again and bounced back up. Now, spiders actually finished down today. I think the Qs are around run flat. Still kind of finished outside of this wedge. It tried to get back inside that little wedge. So, a lot of people will argue, oh, that's a great bottoming tail. We should build off that. But I'm not all that excited about that because I'm just not seeing any real enthusiasm and real direction right now. A reason for this, I don't know. Maybe this market is so conditioned after 8 years to buy the dip that it's just continuing to buy the dip. No one's chasing prices right now, obviously, especially with incredible earnings season that we're having, and to see this price action. I mean, that's going to be in the next segment. But definitely not chasing, but at certain levels, they're still buying the market. And lo and behold, right below the 200, the seller just kind of faded out, and then the buyers just was stepping in. We'll see what happens. Once again, I'm not the kind that says, oh, wow, that's a great, I will say this. We once again defended that 200 moving average. So that the bulls have working for them. Other than that, not a whole lot. I mean, I'm not going to get excited just because we had a long tail here once through the, I'm not sure that's a, bottoming tail for the market to move higher. real quickly, the diamonds look pretty much the same. The Qs were holding up well today. I mean, I say holding up well. They weren't down, anywhere near their 200-day moving average. Not even, close to this low going back over here. It was just not that bad in the picture of the Qs, and still, they're above their 20. It closed today above the 20 and above the 10. So they're hanging out still right in the middle of no man's land. So the jury is still out on them, but we're just going to have to see what happens, guys. It can be frustrating, and honestly, I was kind of hoping for a break and just a really horrible day, and maybe we do get that 25% correction from highs, like a lot of traders hope for, because then everything kind of resets. A lot of there's really provides a lot of opportunity for trading in excuse me, in any time frame. But Jamie, did you want to add something to the overall market recap?
No, but it was just, it's kind of comical seeing the tail develop and close just right at the 200-day again. So, all we can do is see what happens tomorrow. Of course, Friday, sometimes they're interesting, sometimes they're not. But, we'll probably just move back up into that little range, and, at some point, maybe it's next week, it's going to try again. It's going to go one way or the other again. So we'll see which one wins out. I mean, that, the tail is the tail, but just as you said, in the moment when that was actually unfolding, the volume levels were pretty substantial.
Yes.
And that's always, I mean, it's still the way it always has been. I mean, here lately when we have these little up days, the volume's light. There's more volume on the downside pushes. Now, does that mean we're going to go break down? Not necessarily. It's just an interesting observation. On the up moves, light volume. On the down moves, big volume. People are getting out. Institutions are getting out of things. But anyway.
Yeah, you can actually see on the chart as well. I noticed this morning as the market was selling off, it was doing over 2 relative volume, and then we just kind of just died out. And then in the up move, it wasn't. You can see the relative volume started actually coming down as the day gone on. So.
And of course, Andy, we could consult the peek into the future known as the Bitcoin daily, because it's still playing out in that capacity. Of course, Bitcoin's ahead of it, so it's starting to smooth out now.
Exactly.
But I mean, we talk about it all the time. A lot of guys out there think, from the technical perspective, that all the charts still point up. But we'll see.
On the longer time frames, if you want to look at a monthly or a weekly charts, I can see your argument there, and it may happen. I haven't seen anything. That's too far. That timeline, the monthly for me is just, no one has that.
Right, and I'm not claiming to that I know. I'm just quoting the quote unquote experts.
Sure.
That we see out there.
Oh yeah. Yeah, that's more for investors, that kind of time frame, and not so much traders. But
sure.
We'll just have to see what happens. But I was kind of discouraged. I really think for some good healthy trading as we move into the spring and later in the spring and summer, if we do stay in this range going into summer, it could be. There's what's great about this software, you can always find opportunity, and that's the beauty. And honestly, when you get in a market like this is when you need a software like this, so you can find what's moving. I always, I mentioned all the time, it's not only important to know how to trade, you need to know what to trade, and that's what our software does for you. All right, so before I pass it on to Jamie, I have to add my, 2 cents worth here on this trades. I mean, just you can see I have mine sorted by entry time, the most recent on top. So if you go back in this morning, just fired off shorts pretty much all morning, mixing with a couple of gold longs because gold was holding up today. You can see GDX was finished, the top sector other than VIX today. We don't really include VIX as a sector, but. So really, Holly, from the get-go, from the moment even when the spiders were trying to bounce in the first 45 minutes there, Holly said, nope, not seeing any of those setups. Even though I came to the party with a lot of long strategies, I have my little quiver of shorts as well, and that's what I'm seeing. And then you saw a number of shorts in the first 2 hours of the morning versus very few longs. Now, when the market did settle in and start bouncing, what happened? Holly stopped firing off shorts and she put on a couple of longs. One worked, one pretty much just scratched. But nonetheless, $2 in risk off profit in a mess of a market like this, man, I tip my hat to her, Jamie.
Hey, I was tickled pink with her performance today. It worked exactly as we hoped it would work, or the results were as we hoped in a market like this.
And really, we're looking at risk off here. Of course, risk on didn't finish as well because she did have so many shorts, and the market did bounce. But I think Jamie will probably have a column up on his where he calls max profit percentage.
Oh, and is it pretty?
Yeah, so I always love when you show that, Jamie. So yeah, just go ahead and take the wheel when you want, and I'll let you dissect it further.
Perfect. All right. So hopefully you guys have eyes on my desktop now. Of course, for some reason when I do that, my little window tries to disappear, but I have found it, so fear not. Okay. All right, so here we have Holly. Now, of course, late last night when I pulled up TI, because I always like to see how many strategies she's come up with for the next day, I was like, oh boy, it's going to be an interesting day because of the number of strategies that were present, 13 of them. Now, 5 shorts and 8 longs, and of course, we know that the shorts pretty much stole the show today, with a few longs going off in the gold sector and a couple of other random ones. But as Andy was pointing out, didn't go long until the bounce had been put in. Once again, very nice timing on her behalf. So, of course, 1, 2, 3, 4, 5 of the strats didn't even fire. These guys up here, 1, and then the top producers up here for the day as far as trade count goes. Selling into strength, underperformed, but man, this guy knocked it out of the park here. We went 1 for 1 here, 50% on these guys. And of course, when it's all said and done, it's what did the yield curve show us during the day and when the day was done. So risk off, got up to almost a 3-point gain at its high, just slightly under $2.94, where risk on at one point was in excess of 4 points when those shorts were open and working. But of course, as the market turned, this even happens a lot when the market doesn't turn, right? Boom, we get the spike, then the portfolio takes a little pullback and then edges on down. So plenty of time to scale out. It wasn't just like it went wham. And of course, as the market went positive, or the market turned, I can't say positive, the shorts showed worse on risk on. But once again, best way to address risk on and risk off, in my opinion, is on a trade by trade basis. Simply makes a lot more sense, especially since we're looking at this in historical fashion, but we all have to react in real time as it's happening. So let's take a look. First off, let's just sort by risk on here, because there were several opportunities in here to capture more than Holly on risk off by making the decision to stay in the trade. Of course, as fate would have it, look at the biggest winner today was not a short, but a long. Now that's in risk off form. It certainly was not the biggest winner in risk off mode today. Biggest winner in risk off mode was STT for 93 cents. But we're going to sort by this column to go over whether or not you choose to participate in risk on, assuming we were in the AAOI trade. Of course, let me pull this out a little bit. These are 5-minute candlesticks right here with the opens way back here. And when I click here, here's our entry point. Now, seen this song and dance many times before. Now, for those of you who might be seeing this for the first time, just take note of the interest points over here. Stop loss is automatically populated for us, along with the entry and any profit targets if the strategy is using a profit target. Now, most of these you can see here, $2 profit targets. Most of the ones that were active today, anywhere from $1.50 to $2. We didn't really have any targets hit today. Now this one went on and did it in risk on mode, as we can see up here. But man, several good things to point out about this trade. A lot of good characteristics. Number one, Holly's delivering it, pushing through resistance to be specific of the strategy. Came into the session at 65% probability for us. That's great. So when I pull this one up in real time as she calls it, I know I have that statistical probability behind it. And then my eyes are immediately drawn to the pattern that's emerging, which is a range break. You know, if we go ahead and just carve out the bottom line here, highs and lows were put in, then it goes range bound, sneaks back up to this area where I've drawn the line, and as soon as Holly calls it, boom, it's a range break as well. This happens to be one of my favorite little intraday patterns here. So I've got that working for me as well. Now, AAOI did not really blow doors off today on volume, finished just a hair below normal. But, you know, keep in mind, a trade can work just on the statistical probability alone or the chart pattern alone. So we've got two things working for us right now, what I like to call a two-star trade. But sometimes we even get the added benefit of volume as well. So just keep that in mind as you move forward and you see these things unfold and you work with Holly. All right, we got the stat prob. Sometimes it's going to be that nice little chart pattern that we like, which is even better. And then thirdly, we can also see that volume multiplier, whether we're looking at a single stock window or any other window where you're viewing this type of information in the TI product. So great little entry here. We immediately get into the money. It takes a little pullback. Go red for just a hair, but doesn't come near to stopping us out here. And then a little grind back up. Now, also, sometimes when you catch these patterns early enough in the day, they set up a couple different times. So right here, did the same thing. Came up here and popped that line again. Higher move, a little retrace, and so forth and so on. So this one's set up nicely several times, which is also a good time to bring up one of the harder things for a newer trader to kind of wrap their head around, and that is adding two winners, because you hear a lot of people say that. Make sure you cut your losers and then add to your winners if the timing is appropriate. And in this case, not only did we have the first entry, but another one here, and then a nice finish to the day. So Holly, why did she close the trade? Well, timed exit. Pushing through resistance, once again, is designed around a 60-minute hold time. So we can see right here, she's cashing out. The easiest way to get used to this is just do the old half and half methodology. Okay. Now, when I saw this, I'm like, oh my goodness, it's actually setting up again. But Holly's exiting. But because it's me, right, and I have anticipation of what might happen here, well, we could add to the position or just say, you know what, Holly, I'm keeping my whole lot. But when you're brand new, do a little bit of both. Go ahead and peel out. If you're in 200, cash out of 100 with Holly on risk off. Lock in your 24 cents just like she did. Take your stop loss, move it to break even. If it keeps going, you get paid more. And in this case, this one did. Never made a regression back down to the break even line. So we would have stayed in that second lot and got something, depending on where you got out, something between 24 and $1.04, 76, that's 80 cents. All right, that's a big spread there. We want to capture as much as we can. We know we're not going to top ticket every time. That's the anomaly, not the rule. But even if we made 50 cents, 60 cents, 70 cents on top of the initial 24 cent on the first lot with Holly, That's a great deal. All right, I see Holly. I see Andy's keeping up with the questions panel, so no need to take a pause just yet. So that's the way we play risk off, risk on in the moment when it's actually happening. You know, just peel out a half with Holly, and of course we want the chart to be conducive, right? Of course, sometimes we can look to the daily to try to get an idea of where something might put the brakes on, right? And of course, in this candle right here, my eyes would have just immediately drifted up here to the high the previous day, right? And of course, it tried. It didn't quite get up to that wick, but it got a good portion of it. So a nice little move in there on that long trade today. Now let's take a look at risk on, risk off, or going risk on a short trade. Our EXR here, okay? Now, first and foremost, what an entry. I mean, talk about a top tick, right? Doesn't really get any prettier than that. And I've got another one to point out to you guys here in a little bit that looked very similar to this, but the timing was just slightly off. But we can play that to our advantage. But hey, nothing but kudos for the entry there, and then just an immediate move in the direction that we like it to. So once again, Holly did stay in this one for the duration, selling into strength. Once again, a 60-minute hold, just like the other one. Most of these, all of these today that fired were actually geared around that 1 hour hold time. So she stays in at the duration once again and gets out right about here. Or let's see here, what was her exit price? 31, somewhere in this bar right here. I don't feel like dialing it in, you know, exactly. But that's exactly where the dark shaded area stops, right?
Yep.
Of course, what do we do if we want to play the half and half? Just go ahead and peck out of half lot, half your position. Set your other stop loss from the original stop loss back to break even, which is up here. And boy, you got to enjoy this nice little, you know, wasn't the elevator, but hey, we'll take the staircase too, as long as it goes down, right? And, you know, pretty pain-free trade on that one. At the close, it was up 46 cents, so an extra 20 cents in there. You grab that extra dime, boy, that sure adds up over time. You make 36 and 26 versus just 26 alone. Of course, sometimes they will roll over, but the good news is it's still a winning trade because you locked it in on your first lot.
Jamie, we have a couple of questions here. I think it would be better addressed verbally, but
Sure.
yeah, one of them, I'm not sure what Fernando means here. Is Holly programmed to allow for multiple entries in the same day?
Well, I think that would be multiple entries in the same symbol, I take it, probably.
Yes, and that has happened.
Yeah, it has happened.
Yes, several times.
You know what? I was looking at all the trades earlier, and I was like, well, was that a double entry on one of these? But it wasn't. But yes, it can happen. Sometimes a different strategy can fire the same symbol. It can also happen at the exact same time. We've had strategies that are similar but slightly different fired at the exact same time. And we've had it where, you know, one strategy will call along and stock XYZ, maybe it makes or loses money in it, and then 30 minutes later, a different strategy signals the same stock. So that is possible. Now, she will not make multiple entries of the same symbol from the same strategy, though, just to be clear.
And then the other one is, how does Holly set the stop loss?
Yeah, no problem. So everything's pre-configured in these strategies before the day starts, right? So here we are looking at the strategy panel. If we focus on this column over here, the stop loss, you can see that if it says smart stop, then that is using our proprietary smart stop as the value to use. And it's going to be different for every single stock because every single stock has different characteristics, kind of like a person. Every stock has its own personality composed of several or many different factors. Volatility, typical average volume, you know, lots of other things. So our smart stop functionality is actually a filter, right? So I could easily go into the filter set here just from a top list. And if you want to get more familiar with how the smart stop operates, doesn't really matter which window you install the column. You can install it in your alert window as a column or a top list as a column. And any stock that's being shown through that window, you can glance over at this column and see, hey, if I trade this, this is what Trade Ideas is telling me to use as a recommended stop. And you'll notice a lot of the time, let's see here, let's go ahead and click on another trade from our blotter. So when I double clicked on AEM here, it's a Holly trade, so all of this information is going to post up right here. Now, even if it's not a Holly trade, right? What if I just pull up a random stock? So Tesla, right? Which, wow, for all the crazy news out on Tesla, not a very volatile day. But let's say it was this part of the day and we pulled Tesla up and we're thinking about trading it. Well, the smart stop's automatically going to populate on the charts for us as well, along with a profit target. So, you know, if you get a good signal on Tesla somewhere in this area, and this is always here in real time, you know, at any time of the day, you've automatically got your stop and your profit target on anything that you just pull up, you know, at random here. So the smart stop not only manifests itself in Holly strategies, but automatically on your charts for you as well. So hopefully that helps illuminate that a little more. And I see we had another question about Holly. So is risk off, profit means earlier exit? Yes, and to clarify just a little further, Vitaly, it's just Holly using her rule set like me, you, any other trader would do, sticking to her rule set, profit targets, stop losses, timed holds, and then the other two options that she has, if a stock position that she's in is not working and it's red, she has the option to close that early and reduce risk. On the same other side of that coin, actually, she has the ability to close a profit earlier. So profit save and reduce risk coupled with stop loss, profit target, and timed hold. Those are the 5 reasons why Holly will exit a trade under risk off.
Very good. And to elaborate on John's question, he says, when I upgrade to TI Premium, how do I set Holly to only recommend stocks between $3 and $20? And you can't do that, John, but what you can do is familiarize yourself with the strategies. And if you go to our webpage and go down to the footer section at the bottom, you will see a description of for our AI strategies. And if you click on that, you will, as Jamie's going to show you here, you'll be able to go, just go to the footer section, and there's your AI strategy descriptions. And then you can just click on one, and a lot of times it will have the dollar amount in there, what it's looking for. Mighty Mouse is a lower price one. Little Big Guy, of course, is a lower price stock. But one thing I want to say for people, a lot of times you think that you don't have the capital, you know, to trade. Even if you're trading stocks like between $2 and $10, and you think you might not have the capital, but you're going to get a lot of times a bigger move in a $15 and $20 stock, or in John's case maybe a $30 or $40 stock. I really think it would behoove you to really try to maybe just cut your size back and try to and play the more expensive stocks, just because you're limited yourself on the opportunity out in the marketplace when you have a narrow price range, and especially with Holly. Holly's going to call, she is going to call a lot of stocks between $10 and $20, but she's also going to call a lot between 40 and 50 and so forth. So try to just learn, instead of trading 1,000 shares in a $10 stock, trade 100 shares in a $50 or $60 stock. Just learn how to do that, because you don't want to limit yourself to amount of opportunity in the marketplace, especially when things sometimes get slow.
Yeah, well said, Andy. And to that point, it's none of that is really based on choice, right? We'd love to have some really low dollar stock strategies in here that just killed it, but guess what? The numbers don't dictate that, right?
Mhm.
After all the analysis, that's basically what this model is telling us. Well, I'm not seeing any advantage in the small stocks, but when the advantage is seen, those smaller priced strategies, they'll make an appearance.
Mhm.
Okay, so one more to take a look at here. Actually, that's not it. Okay, yeah, NEM, just want to kind of go over that last example of risk on here. Now, here we go again with with Holly's entry, and then, you know, everything's fine, and then whoosh, throws us a little bit of a curveball, but guess what? Well, that's why we have stop losses, because sometimes they do take little wiggles against us, and that's okay. In this case, right back up to the entry point and got profitable for us. We can also see this is where Holly was like, you know, I've set this wiggle. It's still just doing the same thing it was doing before the wiggle. Time is passing, and, you know, I'm going to go ahead and close it. So she closes the trade, takes a big 2-cent winner there, you know, just barely above the entry line. And then, of course, bam, 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 higher and higher. So this is another case where just simply following a methodology works, and that is cashing out a half with her, keeping the other half. But here's the kicker. Look, I mean, like, we almost got stopped out here, but guess what? Didn't happen, right? Holly gets out right here. That's the last time it wicked through there, and boy, you would have barely stayed in it by the skin of your teeth. Now, it's always a good idea to put your stop maybe a few pennies outside there, just to be on the safe side. But this one, boy, it came back down, but it never did go back through. So, you know, that's a good risk on trade there. Still works. Came close, but didn't get us. I mean, I had one just the other day on a position, almost a penny. Matter of fact, it was ABX, but it didn't stop out. Now, ABX was traded by Holly today, and also that was one of the trade of the weeks not too long ago as well.
That's right.
Okay, so that's pretty much it. Now, I did want to take one opportunity to point out the biggest loser today, WLL. Now, we saw the beautiful top tick that Holly had earlier on a position where she pretty much nailed it up here. Same, looking for the same type of play here, but just gets it a little early, right? Timing is everything. So as soon as she plugs into it, whoosh, right up here, wicks above the stop out.
Yep.
Now, here's what I wanted to kind of go over. Just like, you know, Steve and Andy and I tell stories about trading in opposites and, you know, taking advantage of other people's trades, even though they didn't work for them. Well, we saw them fail on it, and then we got a better entry, and it worked for us. So whether you took this trade and got stopped out, or whether you just saw Holly getting stopped out, it's never a bad idea to go over here and go, okay, well, you know, I wish that arrow wasn't there, but we can see the wick there, that prior, I think. But anyway, to be approximate, you know, look, it was butting up to this area back here.
Yes.
February, right? So you're like, ooh, I see what it might do here. And then once you see that tail put in, or whether you wait for this or this, you know, you could have gotten a good signal off that. The timing, you know, I'll defend this call all day. The timing was just off a little bit. But hey, we're humans. We can look at things and go, I'm going to watch this one. If it looks like it weakens up a little bit, it might be a good play. Even though I saw Holly get stopped out of it, timing was just a little bit off. So just always get in the habit of, when something gets stopped out, either to the long or the downside, consult that daily, because you still might be able to pull something out of there even better.
Good point. I didn't even see that that resistance going back. That goes all the way back to the February of last year. Yeah.
And look how much energy that thing's been expending. Oh, and by the way, Holly was telling you to buy it all the way up. See?
Look at that. Yep.
So all kinds of informational nuggets to be gleaned by what Holly is whispering in our ears. All right, buddy, let me pass it back over to you.
All righty. All right, guys. what I want to talk to you about, let me kind of set the stage here. I was actually talking to a financial advisor the other day, and explaining to him, kind of like what I did in a webinar. I was comparing the spiders chart to what we saw in Bitcoin about 6 or 7 months ago, where you had this kind of rise, kind of a smooth rise higher, and then you get the other side of the mountain and things start getting really exaggerated, a lot of wicks, a lot of red candles, and this a lot of times can depict a potential top in the market. And him being more of a fundamentalist and explaining to me, well, we do have earnings season coming up, and I just kind of said, well, yeah, but honestly, I don't put a lot of weight in earnings season because it's kind of a lagging indicator, and you don't know what money has gone to work in the prior months and years based upon valuations going forward. So what I was trying to explain to him is we could have killer earnings and this market still go down, because it's price action, and the market is built on sentiment a lot of times, and our earnings right now are crushing it, but we're not seeing the price action, the bullish price action with these earnings. And that's what I was trying to explain to him. I said, don't get caught up in the earnings and the talking heads on television thinking because the earnings are great that the market has to go up. And so what I wanted to do is explain to you guys what we're seeing today, and then kind of give you the 4 scenarios when it comes to earnings season. And you can probably kind of go back in your head. I can't really remember the years. I'll try to pick out a couple of them, but and we'll kind of go over them. But here's the 4 scenarios when it comes to earnings season. Okay, you can have good earnings and bullish price action. Okay, that's probably the most common. Market goes up 7 out of 10 years, and in most cases the earnings are good, kind of driving the market. But that doesn't always have to be the case. Okay. Obviously, bad earnings, bearish market price action. That's what you're going to see in a bear market. Probably what you experienced a lot back in 2008, 2009. Earnings were bad, market was getting crushed. You had bad earnings and bearish price action. Then, third scenario, you could have good earnings and bearish price action. The fourth is bad earnings and bullish price action. We saw a lot of that in the early part of this bull market move. When we came up out of it in 2010, late 9, 10, the earnings weren't all that great, but the market was moving up nicely, and a lot of that had to do with, for whatever reason, the monetary policy and things like that. A lot of money being thrown at the market, forcing people into risk assets. So you can see any one of these 4 scenarios. Now, what we're seeing right now, we are seeing good earnings and bearish price action, and maybe not so much bearish, but we're definitely not seeing the kind of bullish price action that you think you would see after these earnings we've been seeing. So, and really, earnings season started probably middle of March right here. So we're not really like way down, but then again, we're not really moving up. It's more of a move from upper left to lower right now in this market, even though we have really great earnings coming out. So that's what I want to kind of make you aware of, guys, because, I know you hear this over and over, and it may get old to you, but price is the only thing that pays. And don't get caught up so much in great earnings. I've seen so many companies gap up this year and just sell off and fill the gap and for several days. What does it mean for the long term? I don't know. But and why is this happening? Like I said, there could be several reasons. We had a great move in 2017. Maybe people are buying not only the earnings of 2017, but they're buying the valuations going forward on earnings projections. So don't try to guess why a stock is doing something. Your job as a trader is just to react to that price action. But I just wanted to point that out because I know how easy it is to get caught up in seeing some good earnings and thinking, oh man, this thing's going to rip. you know, the market, remember the market's always 6 months ahead. Okay, so earnings right now are great. The market may not even be looking, you know, at what earnings they're looking ahead. Maybe some macro event. They're seeing interest rates go up, looking into the future of interest rates. There can be so many reasons why, you know, a market can move up and down. And don't think, even though earnings are probably the primary driver in the economy, don't think that it's the only thing. See what Mike, yeah, Bill, good earnings, flat action, kind of what we're seeing now, almost, you know, but it's definitely not good price action, bullish price action. And Mike gives an example of good earnings, but slight negative guidance. Price action goes down. Yep, that's true. So anyway, guys, there's more drivers in the marketplace besides, you know, earnings, and a lot of macro events, and sometimes underneath the surface where you can't, you know, even see what's going on. Kind of like what happened when the market, you know, topped out in 2007, and then we got that horrendous bearish action in 2008, 2009. Only a few people were able to see, you know, what was going on in the mortgage environment. And but, you know, of course, later, why didn't we see this coming? You know, we could be saying this another 6-7 months down the road. Why didn't we see this coming? So anyway, if you're following price action, you do see it coming, okay? And that's what I want to tell you, you know. So in other words, you obey your stops, you get out, you know, market breaks down below these levels right here. You're not going to be the one, you know, when the market is trading way down here again that says, why did we see this coming? Because you were obeying your stops once we broke a critical level up there. So anyway, I wanted to point that out for those who might be interested. And my next topic was, oh yeah, it's going to be, and I'm going to go over this pretty quickly. I don't have a whole lot of time left, which is fine because this is kind of just still in its incubation phase. I just started creating this kind of today. And this is an interesting alert because this is one where I didn't use a daily setup, or, you know, as far as look when I'm building my filters and alerts. So let me just show you what I'm talking about. We'll just go into configuration here, and you know, I've been doing some optimizing on it already, very little, but I'm looking for a stock, okay, that's hitting a new low. Here's my filters, and I got everything hidden, and you're going to see here I don't have any sort of, I have one position in range, and that's my position in the previous day's range, and this was just an optimization. So I'm looking for stocks hitting a low, okay. This is a change from the close. In other words, it has to be down at least 1% on the day. If I hit the show me button, the price was down between 1 and 3.5% from the previous close, okay. So we know now the stock has to be at least down 1%. I'm going to move over to the next one, which is S&P change for the day. You can see the max is a negative 61. Let's click on our show me button. The S&P was down between 0.61% and 1.3%. So that's when it's going to take a trade, when it's between that range right there. And then I got to change from the open. Okay, I don't want it, the price was down no more than 1.4% from the open. Okay, so this is just, these are just back, I just started grabbing some filters and putting them in here. That's just an average daily volume of 300,000. So really, there's no really setup I'm looking for, like a break between below a 5-day low, a break between you know, of a 10-day low. I'm not looking for any certain pattern here, and I just wanted to see if I could create something and hopefully just get something based on statistics and not so much of you know, a pattern. And it's pretty interesting because I'm going to show you what I did. Let's take a look at the back test, and this is what I got working so far. Now I'm going to do a lot of work on this. I just started it today and I had other things going on, but amazingly it optimizes the best between 9 and 10 a.m., which I'm on Central Time, okay? So basically 30 minutes after the open, and then works for an hour, and then it just falls to crap. And the same thing in the first 30 minutes, it's crap. Is this going to be an anomaly? You know, I don't know. Time will tell. Timed exit, time of day, 3 p.m. So in other words, it's going to close basically at the end of the day. That's central. So at the end of the day, it's going to close out every position. Risk management, I don't have a profit target enabled. Okay, all I'm using is a percentage, and it's 0.6% plus a little wiggle. A little wiggle is basically, it's an algo that takes into consideration volatility and time and volume. So I'm not going to get deep into that. Jamie's probably a little, actually, I know he's better than explaining it. But just think of it as if something goes down quickly and hits your target, you know, it may give you an extra 5 or 10 cents, considering the volatility that just happened and the volume and things like that. Advanced, open it wide up for the last 64 days, and then summary, just kind of go over everything, and then I'm going to click on simulate sell here. And I was surprised at how well this performed, considering that I'm not looking for any type of technical setup, just basically using a low and then those filters that you saw. All right, so 750 trades, 63% winning percentage, almost a 2-to-1 average winner over average an average loser. Profit factor of 3.23. Now these are really, really good numbers, and I think, you know, I'm going to keep an eye on this and play around with it more. I don't know if these are going to hold up, because once again, I'm just kind of in the incubation, you know, phase of creating this. But I'm definitely going to work with it and you know, see if there's things I can do. And you know what else I'm going to do? I'm going to share it with you guys, so you guys can maybe, I know some of you guys are real good at you know, doing these, and a lot of people get back to me with them and say, hey, I took that, I did this to it, and that's great. I love getting those kind of emails. Yeah. But anyway, you know, what you're going to find on here though, when you go into the calendar, okay, and this is, you're going to find a lot of days where no trades, no trades, no trades. Because remember, the market has to be down at least 0.6%. That's not huge, but you're going to see this, and a lot of times, and you're going to have days where you just have these incredible winners. Let me see if I can find it here. Look at this day right here. You know, 98 of 100 winners, Jamie. You know, and once again, this, you know, it was obviously a very bad day in the market. Okay, you're going to have some losers day. Look at here, 2 out of 63. This is probably a market that just flushed down real quick, you know, and after about 30 minutes or so, maybe some much fired off, and the market bounced. So a lot of losers there. So, you know, time's going to tell. This is the way we kind of, you know, like to give time of day, and look at here, it could probably even squish out. No, there's a lot of good trades there though. But anyway, I kind of wanted to show you how a lot of times we just get started, you know, creating something for Holly. Now what I want to do is I want to get this up to around, it should be easy too, to get it up around 1,000 trades. You know, I could do that right now and still have probably a 55 or 56 winner just by opening up my time. But I'm going to try some other ways to filter it to get more trades in there, and then maybe give it to Holly. But anyway, guys, I will share this. We are running out of time. Let me just go ahead and save and share. And if you go to your go-to webinar chat panel, just pop it out, and I'm going to drop in there. How low can you go? And here comes the link right behind it. All right, and guys, I'm just going to, for those that may be new and not know how to do it, you just click on that link and you're going to pull up a code page. And what you want to do is just copy the URL. All right, after you've done that, just go to File, Load from Cloud, and just hit Load, and it will pop up for you. Or you've got a dual copy now. All right, guys, that is going to wrap it up for today. Thank you, Mike, Christopher, and Fernando, and Bill, and everybody. Yeah, let me go ahead and pull back up our little stack here and bring Scott in. Scott's hang on. Scott's going to offer you a nice discount on the product. So
Good
Scott,
stuff, Andy. Good stuff.
Oh, thank you, man.
Yeah, thanks, guys. There is an ebook, and it's free. Just go to trade-ideas.com/ebook, put in your email address, and get the download link. Andy and Jamie participated in writing some of the chapters. There's 5 strategies on what to do when BTFD doesn't really work anymore. So we're in that kind of environment. You want to have these 5 ideas in your toolbox. It's a good thing to have. Just plug in your email address into trade-ideas.com/ebook and get the PDF. We have a podcast. New episode was out on Friday. There's another one coming out tomorrow. Make sure that you search for Trade Ideas Podcast in whatever application you use to listen to your podcasts in, so you get that delivered directly to you. There's a new code this month, Maydays, all caps, just like you see it on your screen. Make sure that you have the all caps enabled for when you type in Maydays. That saves you 15% off your first month or year of Trade Ideas. You can also use it to upgrade to premium. So you can apply that to upgrading your account status, and it'll save you that 15% off the first installment of your upgrade. Any questions, email us, info@trade-ideas.com. You can send Andy an email directly, Andy at, or Jamie is jhodge at, also trade-ideas.com, just like the rest of us. Jamie is at QuantBot on Twitter, so give him a follow there. Today Trader on Twitter is Steve Gomez. We've also got Dan Merkin, Trade Ideas 1, and some other handles like at Trade Ideas. Facebook.com/Trade Ideas Pro is the place on Facebook to follow, so that when we post stuff, you can share it with all your friends. That helps us out and makes you feel good, right? Anyways, enjoy that. We'll have the recording up later on tonight or tomorrow morning. Have a good weekend. Sign up for tomorrow's Friday webinar. You get the invite in a little while if you're interested in asking some questions. I think Jamie and Andy will be participating in that.
Oh, yeah.
Yeah. So everyone have a good one. We'll get the recording up later on. Bye, guys.
All right. Thanks, everybody. See you tomorrow.
Bye-bye.